Ashish, before I come to your portfolio strategy and your views on the market, tell us how are you analyzing the telecom space in terms of profitability outlook or in terms of this AGR matter or in general, because it's become almost a duopoly as far as this space is concerned.
Yeah. For us, telecom sector is not for us basically because we are mostly bottom-up investors, and the kind of risk that we see playing out in the overall sector for the last so many years, it's not as per our strategy. So we are mostly basically bottom-up companies which are good quality. We do not see risk of earnings basically, and we mostly invest in companies which can double the business in the next 3-4 years, rather than chasing companies like in telecom space where every day there is some news and stocks react, and there's a disappointment on some days, and otherwise. So we are not mostly value guys, and we are growth oriented. So it doesn't fall in our basket of things, the telecom space overall.
No problem. Ashish, are you finding value in large passenger vehicle companies? Maruti was there on our channel today saying that their BS4 stock is exhausted. They have started regaining their market share. Do you find value in large passenger vehicle companies in India?
Yeah, so value is there. See, before the downturn started, the sales growth that we've seen in passenger vehicles, that was phenomenal, and it lasted for quite a few years. And I don't see that the demand will not come back. The only thing is basically that how long this weak demand scenario pans out. But definitely, it seems that we are through the worst of times in terms of the fall in the volumes on the passenger vehicle side. Because inventory, our talks also with the auto ancillaries and the dealers, it suggests that the system has become pretty light in terms of inventory, and whatever we see from here, it will be incrementally not so bad as we have seen. So investors probably need to keep a check on that. However, as we all know, that the macros have to stabilize and basically lend income in the hands of people for the buying side or the demand side from the consumer angle to pick up in these companies.
It's a very interesting question. Let me get into the realm of a little bit of a speculation and some analysis for the thing. Our market share in the petrol segment currently is close to 60%. So while overall it is 50%, that's because we have a 33-34% market share in diesel segment. Now, diesel currently in the industry is about 30% of the total market. 70% of the market is petrol. So you can say out of the 50% market share which we have, 70 into 60%, which is 42%, comes from petrol alone. So we going forward, of course, we believe that for the costs which are going up for conversion of BS4 to BS6 diesel, this diesel percentage, 30% of the industry, will actually come down.
So that was the management, Mr. Srivastava, senior management of Maruti, talking about how things are at the company. Ashish, the big story which we are gathering at ET is that the government may review long-term capital gains removal, complete removal, and change the definition also from 1 to 2 years, the threshold. So what are your thoughts? Because that is actually where the market peaked out, if you remember. Do you think that 2018, around the budget time when it was levied, it's been almost 2 years, 18 and 19. If indeed they remove it, do you think it will be beneficial for the stock market from the sentiment point of view?
Yes, absolutely. B market types take all these news or all these enabling factors very heartily, and that will be a welcome move if it happens. So I don't have an iota of doubt, basically, that if that some relief comes in, it also signals that the ministry and the government is thinking about the capital markets as such, and it gives some confidence to investors as such.
Right. Ashish, what are your thoughts on the way polarized nature of the market is getting normalized? Last 2 weeks, if you look at the data, there is a sudden departure, of that gap. Small cap, mid caps have outperformed sharply in the last 2-3 weeks, and that continues. Whereas the benchmarks are languishing, at best flat. Do you think this year could be for the mid caps?
Yes, so after last year, which was entirely, almost 90% of the market didn't see any movement. It's mostly was polarized in a few names which are quality, with or without growth, basically. So it is pretty good that the market breadth is kind of improving, and we are seeing some good amount of buying happening in mid caps and small caps. However, there is a word of caution here that this is a multiple catch-up probably happening. But as an investor, one needs to be pretty cautious in terms of what kind of companies one is getting in, because every investor or fund manager has a strategy of picking companies based on certain parameters, and for us, quality is an important parameter. And just because of the move, people might get sucked in again, just in case it is a prolonged phase for the economy. So as of now, the sentiment has improved. It's good. But on ground, or the data doesn't suggest as of now. If you look at the components of GDP, how they're moving, or even talking to the companies, it doesn't suggest that we are anywhere near the pickup. Though it will be a surprise for all of us, the timing of it when the pickup comes. But one needs to be cautious on the names that one is getting into.
In fact,
and this year can be of mid caps, as you said. But one needs to be cautious on what names one is.
Right. Let's also discuss the matter of LTCG further and get you a view of Rakesh Jhunjhunwala. We spoke to him earlier, and this is what he had to say about this controversial tax.
I personally feel government should, make it long-term capital gains tax-free by enhancing the period. From 1 year, you make it 2 years. So up to 2 years becomes all short-term capital gain. I think it will lead to net gain to government revenue, and it will lead to a big gain in sentiment. Enhance the period of long-term capital gain, but make it tax-free. Then I think we should give a lot of relief to the real estate sector. We can make a view that anybody who buys a house in the next 12 months, whenever he sells it, there is no capital gains.
Just to understand the composition of your own portfolio at the firm, how many stocks are large cap stocks? How many of them fall in mid caps? And do you also have any small and micro caps?
For us, we don't go beyond 8 to 10 names in the portfolio. So wherever we commit money, it has to be with a lot of conviction. And as I said, my thinking starts from whether the business can double in the next 3-4 years. And we build the portfolio accordingly. And intent is to basically reap the benefits of earnings-led stock price increase rather than basically money moving to name just in the name of defensive without any earnings growth. So that's not what we do. We want to have in the portfolio companies which actually deliver price appreciation based on earnings growth. So on the composition side, we are into pockets of private sector banks. Some consumer names which still are growing at 25-30%. And we have specialty chemicals in the portfolio. We are seeing that to be continuing to give very good numbers. Last year, we had a very good alpha generation on the portfolio because of all these strategies. And I don't think we need to change our strategy. The composition on rather the mid-cap, small cap, and large caps. We have a multi-cap portfolio. Anything that fits our matrix of choosing stocks, we are buying those stocks. But we also have a technical angle in mind as to the volumes that each stock has, and that's how we would be having, say, 90% is mid-cap and large cap, and maybe 10% of small caps, where we have very high conviction on the growth trajectory of those companies and the quality of those companies.
Aashish, tell us what exactly is the earnings profile of your portfolio, the companies which you have. What's the 1 year forward earnings growth which we are talking about, 1 to 2 years? What kind of average earnings will your portfolio likely generate?
So the portfolio is built in a manner that we target 25% earnings growth for the portfolio as such. And whether you talk about a 3-year horizon or a 1 year horizon, that 25% benchmark remains. because we believe that earnings should lead to stock price increase. That's the basic fundamental, and that's the number that we target, around 25%.
And what about if you could talk about, if not stocks, what kind of theme which you have? What are you owning there?
Yeah, so as I said, there are certain companies which, even in this environment, are growing at 25-30%, and we are in there. As I said, there are certain private sector banks. There are specialty chemical companies which are moving on that trajectory and pretty strongly. So basically, those are export-led, and there are agrochemical companies, and we have back-end pharma. We have something in retail sector. So broadly, these are the spaces where we find that kind of growth is coming, and those are kind of quality plus growth growth companies.
Yeah. One last question: how are you seeing flows when you go and meet clients, the HNI kind of community? Is there eagerness to deploy more funds, or do you find reluctance?
No. There is great optimism in terms of money being parked. So we have seen clients doubling their money in the last couple of months, doubling their money with us. And I mean, we delivered good numbers, basically 30% return last year, calendar year, and that's led to a lot of money kind of flowing in from the HNI side. So we are looking at a very good next 6 months in terms of money being garnered. And yeah, it's going pretty good right now.
May the good run continue. Aashish, thank you very much for your time joining us on the show today.